Hey everybody, it's Noe Fibonacci. I wanted to go ahead and hop on, do a real quick video update of a previous trade idea that I've published for USDCHF. I want to go over what's happened the past couple of months, what happened last week, and then what I see to possibly be coming up in the next coming days to a couple of weeks. So to start things off, I have our chart here set at December of 2023. Now, I want to point out this low here because this low was considered a new low since January of 2015. And you're going to see as I play time forward that this low ends up being a pretty good test of this support zone, and it finds some great support. So to go ahead and start moving forward, so you see here to start things off in January, started off really good for the United States dollar. So to point things out real quick, here on this bar, on the 5th, we had extremely good NFP, non-farm employment change for the dollar, which started the strength for the dollar. And then after that, we end up getting a hot read for CPI. So meaning basically inflation starting to go up. It was higher than what they forecasted it to be, above the 3% mark. I believe it was. So that ended up giving the dollar more investing or more bullish power, right? So to go ahead and play forward. Now, I want to go ahead and point out something technical here. So we have price playing back up past this support zone here, right? So on the news of that good CP or the hot CPI, price was able to break through this zone. Now, go ahead and pushing time forward a little bit, waiting to see our high. Now here we see that price gives us our first high after our new low. Okay, so let's go ahead and take our trend, our Fibonacci retracement tool here, and we're going to see that we wanted price to go ahead and retrace back to this 85.76 to 85.53 zone. Okay, so let's go ahead and play a little bit forward. You see price trying to play up a little bit, and we actually end up getting price to play into that zone. So what happened on this candle, or on this currency pair with these couple of candles? So what we actually seen right here when price came into this zone, on the 31st, we heard that United States or the Fed were holding the interest rates, right? They weren't going to change any rates. And then after that, to start the month for February, on the 2nd, we got extremely high read for non-farm employment. So that right there was enough price was able to come down, correct in this zone, and it just so happened to use the support area perfectly, right? So let's go ahead and keep time going forward. So not only did we go ahead and get really hot read on NFP, but we also ended up getting another hot read on CPI here on this blue candle on the 13th of February. Okay, so let's go ahead and play a little bit forward. Let's get our next high, which ends up being right here. Okay, so now I want to point out a couple more areas, a couple of zones that I ended up seeing price play with. Sorry. So we end up having price bust through this support zone here, okay? And it actually ends up coming up and testing this area of resistance right here. Okay, so we have our correction here. Price comes down, corrects in our zone on the support, comes up, breaks through the support, and to end that rush to the top, we get a hot read on CPI. Now, with this being our new high, let's go ahead and we'll take our Fibonacci retracement. Now we're looking for a retracement down to the 87.57 to 87.37 zone. Okay, so let's go ahead and let's play time forward. So here, right here on this candle, we end up getting price dipping right down into our zone and getting a touch on this support that it had previously broke. Now we have price coming up, getting ready to break this resistance, but it's unable to, because fundamentally what happens here is that we end up getting a hot read for CPI on CHF. So what ends up happening is that price comes back down, tries our retracement area again, and on that try, the USD ends up getting another hot read for CPI as well, and it just so ends up being enough to help price come back up to our resistance and then eventually break out. So what was the breakout? What helped us break that out? Now, it's actually probably what really pushed this idea into play was that on the 20th of March, we end up getting news that Fed is still holding rates, okay? But on the 21st, the Swiss National Bank announces that they are the first this year to lower their rates. And on that news, we see a large bullish candle breaking through this previous resistance and then on its way even higher. Now, what we see, to point out one last zone, which is going to be a current zone that we are watching. Right here. There we go. Okay, so we have price coming up into this resistance and being rejected. Now, here we are, current time on the daily chart. Now, we've had a correction at this level. All right. Now, on this correction, on this first correction, we were able to go ahead and find out that we may actually be looking at what could be an Elliott wave in the form of the correction wave, being an ABC, possibly an ABC move. Okay. So what does that mean? So to me, back in January, that told me that we could possibly be looking at a range target for USDCHF around the 91 cent to 93 cent mark. Okay, so on that note, currently we are pretty close to it. We're very close to ending this leg. So what I am seeing though is that we've had one, we have our B zone here. We had right. So then we also have our BC. Okay, this is our BC because it's our corrected zone. Sorry, let me make it a little easier to see there. Okay, so we have our corrected zone from B to our C zone, our C area, right? So this is our BC. Now, with this new high being stopped at this resistance zone, I believe that we could be possibly looking at another area or BC zone for a possible entry. Now, what does that mean? So what I want to do is I want to go ahead and take my retracement tool and go from the B zone up to this new high, which means that now I will be looking at the time for time to come if our current high stays intact, which is right here. This is our current high. If our current high stays intact, I will be looking for a buy entry down in this zone. It's going to be at 88.87 to 88.551. I want to see if price is going to go ahead, come back down to this area. Now 88.872 is going to be actually our 61.8% retracement zone, which turns out to be perfectly aligned with our previous highs before our break of resistance, and also will be the test to see if our resistance has turned support. So that is the game plan for the time to come. Hopefully I was able to pinpoint everything in detail. I wanted to go ahead and not only give you the technicals, but also give you a little bit of the fundamental story behind everything. It seems like CPI, inflation rather, is really been the moving block for the United States dollar in this bullish move up. So I want to see either, price coming down to retrace one last time to give us a sort of, I guess you would kind of call this a zigzag, a double. Yeah, I guess it'd be kind of like a double zigzag corrective move. But we'll see. But that's my game plan. Our current high at 90.95. I want to see stay intact. So far it has. Last week kind of was a kind of a big rocker, right? So we had manufacturing come out very well for United States dollar, but typically, since the United States is more of a country based on its services rather than its manufacturing, services is more of a heavier hitting news event, which actually ends up being its undoing for the week, coming in lower than forecasted. And then on top of that, we also have unemployment claims coming in high. So yeah, I guess it's really going to come down to the fundamental story on if CHF is going to catch up, get some power here. But I will be looking for a price to either come down, retrace to our area here for a buy entry. But big picture here is I'm looking for price to go ahead and end up here at the, again, 91.93 to, let's see if I can get it up here. There it is. Oh, there. 91.3 to the 93.42.6 range target. After that, we will possibly be looking for some sort of opposite wave pattern for the Elliott wave. So we'll see how price acts the next coming days, and hopefully we'll have some good trade opportunities coming our way. So thank you for watching, and always, for everything currency, keep it current with Noe Fibonacci.